All right, folks. Welcome to our info session. Gold at 4,000, the price level that could change everything. We've been following this for a minute, and what's interesting is I've had a couple people say, "Hey, I think the name of the webinar changed," and the answer is it has. And the reason it has is because it's been changing. What's happening right here is a changing market, and you got to stay on the front end of it. Those of you, if this is your first time with us, we do these sessions fairly often, once a week, once every other week. They're free information sessions. We really try to deliver to you guys actionable insights. Our goal at the end of the day is not just to deliver you the news. If you want the news, you can go get it for yourself. But we want to give you actionable insights. That means giving you perspectives and giving you information that's not necessarily as obvious as it sounds. We urge you, we urge you to go research what we're telling you. We urge you to go look it up to back up what we're saying, because we try to do a very good job of doing that for you. And we want to make sure we're delivering to you something that is actionable, something you can move on, and it's useful. It's got utility function. So today we're going to talk about gold at 4,000, the price that could change everything. Okay. Quick disclaimer. I started talking about that just now, guys. This is education only. You take any type of market risk when you either trade or invest in precious metals or trading in general. And these are your decisions. I can't stress this enough. Go out and educate yourself. That's why we're doing these sessions. We do these sessions for you guys. We do this, a lot of these, and you're going to hear me talk about this in a minute. You can flip to the next slide, Drew. Um, I'm in the financial markets. I've been in the financial markets for over 25 years. I'm a former investment banker from one of the largest institutions in the world, and I'm the founder, owner, and operator of multiple trading education and trading software companies. But I think the key phrase, and this is kind of where I was going to with this, is that I'm not only the president, I'm also a client. A lot of these sessions that we're putting on are because I want to know this stuff. It's not just about, hey, I want to tell the customers X. It's because I'm genuinely curious and I want to go out and find people that have the answers. And it just so happens that one of the people that I turn to for the answers is Drew Yurasek. So Drew is a financial industry professional, 20 plus years, investment grade metals analyst, right? So this is key here, and this is where a lot of people go sideways with this, right? So there's a lot of investment grade analysts out there that are really just straight salesmen. The difference with Drew is he's helped thousands of people safeguard retirement accounts. He's a chief metal strategist with us over at Gold IQ. He's also the managing partner at the Complete Investor and a decorated U.S. Marine with 8 years of service. Guys, I say this all the time. Whenever I get a chance to work with Drew, I feel like I learn something new every time. I meant what I said. I'm not the president. I'm a client too, because I get to sit back and listen to what he has to say. I'm excited about this one because there's been a lot of action in gold, and I want to know what's happening, why it's happening, and how I can take advantage of it. And I'm hoping Drew delivers that for us today. All right, Drew, the mic is yours, bud.
Thank you, Michael, and it's always a pleasure to work with you. You put on some of the best events when it comes to, education for investors across all investment vehicles, and then just really quality companies you run. Every time I work with you and your staff, always just top notch professionalism. Today we do have a lot to cover. I really do believe, and the reason why I'm having this call today is because I am seeing some serious warning signs that everybody needs to take heed of. And I've been through the 2000 crash. I've been through the 2008 crash. I've been in gold myself personally since 2010. I've been helping people protect their retirement accounts with physical precious metals since 2016. And I've worked for two of the top three gold hitters in America before going off on my own. And I am seeing some serious warning signs. And actually, it was about a week ago, we were in a conference call with a bunch of business owners. Michael was involved in this. And I talked to everybody, hey, are you seeing this? Remember, we were sending some texts back and forth, Michael. I think you were on a trip that you were on, and you're like, you know
Yeah.
what? We should do a webinar on this. I am seeing, you ever hear the term, right? The other shoe dropping? I see
Yep.
three shoes dropping, and these three shoes are huge. So everyone, please take out a pen, pad of paper, something to write with. I'll make sure I take time at the end to answer any questions you have. I'm also going to put a calendar invite out there for you. If you want to meet with me one-on-one, have a casual conversation, just talk about your personal situation. I never pressure anyone into doing anything. I educate first. I support you in whatever decision you make, and I'm always available for my clients and even people that aren't clients if you have any questions. Okay, the first thing I want to go over, there's a technical case for gold. Hitting 4,000 is a huge trigger point. Did I know we're going to pull back from all-time highs? I thought so, just because we were on like a 70-80% run straight up. The market never goes straight up. Did I know how far it would pull back? No. But now that we've hit the $4,000 level and it's been here for a little bit and all these other things I'm about to talk about are happening, I am going to go over why technically 4,000 is important. Also fundamentally why 4,000 is important. I mean, this could be a historic price for people on this call. Also, the AI bubble burst. This is something that, in my opinion, is looking a lot like the 2000 technology burst, right? The internet bubble that happened in 2000, even worse than today, and I'll tell you why. Also, AI is doing something to the market that will not allow it to get out of trouble like it has in 2020. If you remember that little pullback that we had during the pandemic, and I'll go over those details. Also, buying gold, there's two ways really you can buy gold. One is inside your IRA. Most people don't know this. You can actually own real physical gold inside your retirement account. It's tax-free, penalty-free move. You lose no value. You're just moving from paper to physical assets. And I'll go over those details, how to do so. It's, by the way, 10 minutes. That's all it takes to open up your gold IRA. Also, you can buy gold direct in your hands. You can take any cash that you have, turn it into gold, real gold. Nobody in this country delivers gold faster, safer, more effectively than us. Gold in your hands in 1 to 2 days, and fully insured. And there's coins you can buy, and I'm going to go over this detail, that are deemed non-reportable by the IRS. Whoa, what does that mean? You heard me right. You can actually own coins that nobody has to know you have. And again, I'll qualify that and go over those details. And then again, I'll stay to make sure you get all your questions answered, and I'll put my calendar invite. I do want to pop out. I know every time I do a presentation with a guest, they're always like, why do you keep on popping out of the presentation? I just want to go to my main website real quick, because you can check me out on my company, The Complete Investor, at thecompleteinvestor.net. Now, on this page says client reviews. Yes, I put these reviews on there. They come from all of my customers over the years, and you can read them obviously from my website. But I encourage anybody to type in my name, my full name, Drew Yurasek, and gold in any search engine, and you'll see every review from every person I've done business with since I've been in gold. And I only have 5-star reviews. Why? I kind of mentioned it a little bit earlier. I inform, I educate, I do not push anyone into anything. I give you the information to make great decisions with your money, and then you decide. Then number 2, I support you, whatever that decision is. And sometimes it's, hey, you shouldn't get gold, or hey, gold's not right for you, or silver's not right for you. I have those conversations. I talk to probably about 100 to 150 people a month, investors all across the country, and a lot of people, gold's not right for them. It's okay. So I never push anyone into anything. I support you in your decision. And then number 3, I am available. I make sure that I'm available for my clients pretty much 24 hours a day. All my personal clients have my cell phone number. You can literally call me day or night or on the weekends if you have any questions about your account, the markets, your gold. And last but not least, I am a full service dealer. What does that mean? I can cash you out. There's some people that already have gold. As a matter of fact, I got off the phone with the gentleman today. He's like, I'm ready to cash out. 73 years old. I want to do something else with my money. I've had it for a long time. I can cash you out. Top market dollar, and usually same day. And if you've got a lot, some people have a lot of gold, a lot of silver. I can actually fly out to you and cash you out in the comfort of your hometown. So you can call me up and talk to me about that as well. So let's get back to the presentation. And by the way, I do look at the chat and try to answer questions throughout the call. But if I miss it, just keep it to the end and we'll go over your questions. Okay, let's get back into this presentation. Now here's the technicals. Now, you can look this up on your own. You can go to CNBC and type in technical gold, right? You can go to Bloomberg and look at technical gold. You can go to Yahoo and technical gold. The $4,000 level is already been proven as great support. Not only because it's went above the 200-day moving average and bounced like crazy, but I think you also brought this up in one of your webinars with an options guru, Michael. There was a ton of call spreads, bull put spreads put on
Put
gold
spreads.
for August expiration, which basically
Yep.
put 4,000 as the floor. So all
Yes,
these
sir.
top investors got in to jump on $4,000 level, right? So there's
It was
already
a
all that,
10 to 1. It was 10 to 1 bull put spreads.
right?
So it was literally 10 to 1 that was the floor. It was absolutely, it was incredible. The numbers were incredible. And I've never seen it get that disproportionate. So that was the first time for me.
Now, I know that I don't want to sit up here and bore you or try to baffle you with BS when it comes to numbers. So I want you to do your own research, 4,000 support level, do all your technical research on this. I want to go from true experience, me being in gold since 2010 myself personally, helping thousands of people across the country protect millions and millions of dollars of their assets in gold, real physical precious metals. I own gold myself personally. I have it in my retirement account. My wife has it in her retirement account. Heck, we got gold in our safe at home. We got gold in our parents' safe at their house. This is real market information right here. So gold is tied to our debt. Period. End of statement. I hate doing this to you. You can go to usdebtclock.org. We are now nearing $40 trillion in debt. And that number is not only not going down, it is accelerating. We are so far past being able to pay this debt back that default seems imminent. And there's no bigger threat to the value of your hard-earned wealth than our country defaulting on its debt. And I know they've had the short-term plays on gold, and I'm going to go over these short-term plays on gold between oil, right? Short-term interest rates. So gold's been playing back and forth, staying above 4,000 all the meanwhile. But this debt and this debt clock are accelerating at a pace that we will not be able to discount gold's value based on this. And every time we borrow money, the reason why gold goes up in value is because it's not tied to our debt. It's got its own sovereign value that is globally recognized. And year over year, and I'm going to go back to my chart here, gold will eventually go up with our debt because the farther we get removed from true base value, gold goes up. So I want to go back to 2016. I'm going to bring out my drawing tool. Can you guys see my blue line, by the way? So I got into gold in 2010, and I talked to my wife. I said, hey, honey, you should get some gold too. 1 year passes. She doesn't do anything. 2 years pass. Baby, you better get some gold, man. The markets are not looking good, right? 3 years, 4 years, 5 years, 6 years before she bought any gold. And you can see in 2016, gold was going on this pretty hot ride up. It was accelerating more than normal. Okay. And like a lot of people, they like to get in when the market's going up like this, right? And she finally got in, but it immediately, in the next few months, dropped almost 20%. You don't think I heard that over the dinners, right? Every night. Hey, why is my gold going down? Why is my gold down? Oh my God, what's going on? And she was obviously concerned because that's a pretty big dip. 20% haircut in just a few months. But again, behind the scenes, we're constantly going into more debt, becoming more and more fiscally irresponsible. Just read the article that came out just 2 weeks ago from the Wall Street Journal. We are now paying over $1 trillion just in interest on our debt. We only bring in $4 trillion in taxable revenue. That means we're spending now 25% of our income as a country just on our debt. Some are saying we're going to be at $100 trillion in debt by 2010. At this rate, over half of our income will be going toward our debt. And that's when people are saying we're probably going to default. Now, don't listen to me. Go to JP Morgan Chase, Jamie Dimon. Go to Ed Yardini of Yardini Research, Wells Fargo, Goldman Sachs, Bank of America are all calling for $10,000 an ounce gold by 2030. And that's the low numbers. Some are saying higher. But look what happened to gold in the next 10 years. Again, because we're on this runaway train, and the farther we get removed from 2010s when I got into gold, I don't know, Laurel, if the. Thanks, Keith. So going back to this chart. So obviously, as we go up, there are going to be these back and forth pullbacks, but long-term prognosis is our debt is out of control and we will more than likely default on our debt. Now, what does default look like? If you want to have a one-on-one conversation with me, it doesn't necessarily look like, hey, the dollar's gone. It doesn't necessarily look like, oh, we're throwing away our traditional financing. There are many scenarios that don't look like default, but they're actually default. And actually, President Trump was interviewed by Bloomberg, and he gave a little bit of a tell. In poker, it's called a tell on one of the ways we could default on our debt. And it doesn't look like default, but what it will do is devalue the dollar significantly, and gold goes up against a weak dollar. Okay, now, again, we have this back and forth with oil, right? Strait of Hormuz happens, right? We're cutting off 20% of the world's oil avenues or conduit, if you will. So gold, oil's going up, gold comes down, and that back and forth short-term trade. I actually did a webinar on this. I'm not going to bore anyone with this. We already know that's that's been happening, but we've been settling again above this $4,000 level. So I think we've exhausted the oil trade, but also the interest rates. We've already priced in, and you can look this up. The economists that follow the Fed are expecting 2 to 3 rate hikes this year. 2 to 3 rate hikes are already priced in, and gold has already absorbed that. That's why it went down again when those announcements were made, because if interest rates, short-term interest pays a dividend, right, a big yield, right, that makes the dollar, props up the dollar, and obviously pulls on gold. But again, all staying above 4,000. But something happened last Thursday before the 4th of July weekend. We had a jobs report, okay? We had a jobs report. It was horrific. We only created 1/3 the jobs that we thought we were going to create, number one. So 1/3 of the jobs we were expecting to create were created. Also, 700,000 people gave up on looking for jobs. They gave up 700,000, the most we've had since the 2020 pandemic. Just came out of the workforce. Hey, there's no work. I can't keep on looking. There's nothing out there. I give up. Okay, 700,000. And then every jobs report that has come out since President Trump took office, the second term, have all been revised down. We're now negative since Trump took office. Now look at that news. That news came out on July 2nd before, and look at the price of gold. Not only jump up huge within like a couple hours. Why is that? Because we're probably not going to be able to raise rates. We won't. It'll kill the job market. And the Federal Reserve's mandate is full employment and control costs. And you got to go for full employment first, because that's what gives you taxes, right? People working give you taxes. People not working don't give you taxes. So again, it has pulled back and settled again around that $4,100 level. But just on the implication that we might not raise interest rates, gold shot through the roof, showing how weak the dollar truly is. So again, this is why I think 4,000 is so important. Now, 2030, I apologize, Laurel, if I said 2030 versus 2010 and back and forth. So 2010 is when I got into gold. 2030 is when we're supposed to hit $100 trillion in debt. And obviously the implications of 50% of our debt going toward interest alone and not being able to pay our bills, all that stuff is going to really accelerate. And that's why people are saying 10,000 ounce gold by 2030. Okay. Sorry, I get kicked out when I use my little drawing tool. Okay, so now let's look at. So we got gold, and we painted this picture that gold at 4,000 has already endured the oil trade. It's already endured the short-term interest rate trade, and showing that the dollar is really weaker than we thought, right? Because if we can't raise interest rates, gold's going to shoot up, dollar's coming down, right? So we already know that price is very, very sensitive, and we probably won't be able to, again, raise interest rates, okay? So 4,000's endured a lot. Now let's look at the overall market. And I bring this up because this is looking exactly like the 2000 crash, the internet bubble. Why? Because we spent all this money on investments and infrastructure that will never pay a return. Well, the AI bubble's looking like that. And I need you to know this. 40% of all of our GDP, so all of our growth for the last 2 years, has been AI spending and infrastructure build out. This is from the St. Louis Fed, by the way. So all these are referenceable data points you can look up yourself, okay? And this is scary. This is where the bubble is starting to pop. Oracle's quarterly report, this last quarter, they put in their quarterly report that they don't think their clients, OpenAI, Google, NVIDIA, all these companies, all these AI superscalers might not pay their bill. They literally went on record to say, we have to be prepared that these major customers of ours are not going to pay their bills. That to me is a huge warning. I don't know about you. Okay.
Well,
And then,
it is, especially when you incorporate it to the fact that 40% of the GDP reported, you got to take the first line in account with that. You know what I'm saying? It's not just that independent line, it's all of them together. That's the problem. It's not one independent issue. It's the fact that your S&P is driven by AI. It's
oh, this
driven
is
by
layered. This is
yeah,
we're just in the first slice of the cake, right? This is
right.
got we got
That's
we
what
got
I'm
all these
saying.
layers ready for this. So Meta, and again, we're going back to this AI bubble, right? This or sorry, the internet bubble. This is almost identical to what happened in the internet bubble. It's all this build out for all this, features of online activity that don't make money, and then all of a sudden, someone like Meta comes out and says, "We have so much capacity, AI computing capacity. We're going to start selling it." I hope you guys realize what this means. I mean, this is huge. AI came out on July 2nd and reported that they have so much capacity that they can go and just sell it to everybody. AI makes all these other or Meta makes all these other AI companies look like pipsqueaks. They are so huge. They're bigger than all these companies, including Oracle. They make more money at a higher margin. They could squash everybody in this space like that. And let's look at this. And by the way, again, this is based on Barron's report on July 2nd. And then China, this is another, here's the other little person behind the corner with a knife, right? Going to stab you in the back, right? China is hinting that they are going to dump on the US market free, basically, essentially free AI computing. Basically, just annihilating anyone out there that needs money. Oh, and this just happened this week, guys. Look this up. OpenAI, Sam Altman, calls up President Trump and says, "You want some of my company?" Why do you think Sam Altman, this week, by the way, calls up President Trump, says, "Do you want some of my company?" The government, US government. Because they probably think they're going to need a bailout. That's just my personal interpretation. And not only mine, you can look it up. Why would Sam Altman call the president and say, "This week, I want to give you part of my company"? I think it's 10 or 15%, something crazy. Okay. Ready for this? I got to use my drawing tool. I'm sorry, it's going to kick me out of my presentation. All right, ready? July 2nd. This is the NASDAQ. News of Meta being able to dump AI, cheap AI on the market because they have too much capacity. That one announcement, the NASDAQ drops like a knife. Again, this is getting scary. And the last shoe, and I'll show you how to get gold if you want to get gold. And again, I'm sorry because every time I use my drawing tool, I got to fix this presentation. I think it only does with Google's presentation, just so you know, Michael. So this is the last shoe, the third shoe that's dropping, and I don't think people realize it. I really need you to pay attention. So I've been in gold since 2010. And there was a very simple way to teach people about the value of gold. And it's based on market corrections. As the P&E ratio, profit, or the earnings per share, right?
Yep.
Right? Earnings per share ratio of the entire market hits a level, right? Multiples of earnings, right? It hits a top, it pulls back hard. And every time it gets to like 20, 30 overall, right? Earnings, we always have a crash. You can see it in the 2000 crash. You can see it in the 2008 crash. And so for about 6 years, I'm telling people from 20, what was it? Sorry, it really started accelerating in 2016. I'm telling everybody, look, we're getting up to that 30 times earnings. It's scary. Protect yourself with gold. Protect yourself with gold. Protect yourself with gold. And we had the 2020 pandemic. And we had that huge pullback. And people were like, but Drew, it was the pandemic. It went away. And then, we recovered. Does anyone want to guess why or how we recovered? Stock buybacks. Something happened that the market tested out in 2008 during that crash. And Congress, through the SEC and all the governing bodies, right, FINRA, started allowing companies to buy their stock back more than normal. Okay, 2008. Just testing it. But they really started accelerating that in 2017 and 2020. It is getting so bad, the amount of stock buybacks, 10 trillion since 2017, by the way. See these increases by NASDAQ, 275% since 2017. S&P 180% since 2017, Dow 111% since 2017. You can look this up yourself. Analysts say that if we didn't have the buybacks of our stocks, these corporations buying back their stock, if you take out the hyperscalers, the top companies that are taking all the growth, and took out the buybacks, we would be negative right now. Results for the last since 2017. Right? 9 years. So we would basically have no growth. And that makes sense because the market usually corrects every 8 to 12 years. So 10 years average. Well, if our last crash was 2008, 2009, it makes sense that we have a crash about 2018, right? But that never happened because the buybacks. We tried to correct. We tried to have our correction in 2020 with the pandemic, but that's when buybacks even accelerated more. Now, why am I spending all this time on buybacks? Because there's no more money. These corporations don't have the money to do the buybacks they used to. They're spending so much money on AI build out, 83% increase this year alone, and it's only halfway over. They don't have any more money to do buybacks. So this next crash could be horrific. Now, I might be wrong. Okay, I get it. But at the end of the day, so I have a quick story. The richest customer I ever, and this guy was worth, I'll tell you, because I think he's passed away since then, over $400 million, okay? And he told me, Drew, the worst case scenario and the best case scenario usually never happen, okay? And I get that, right? And I don't want to do this fear-mongering, da-da-da. But he did say something, goes, the reason why truly wealthy people, and this is when he was buying gold for me, and he bought a sizable amount. He said, the reason why wealthy people, really wealthy people, keep their money and grow their money is because they're prepared for more scenarios than the average person. And the reason why gold at 4,000 is so pivotal, because not only is it a great price, it's been tested against the oil embargo trade along with the short-term interest trade, right? Those are threats, right? And it's just held strong at 4,000. but also gold will go up with our debt. Period. And a statement. Look at, since we've gone off the gold standard, gold goes up with our debt. Period. And a statement. It might go through these, short-term blips, but at the end of the day, gold goes up with our debt. And again, 2030, just look at that time frame. If we more than double our debt, it makes sense that gold more than doubles in value. Okay. And it also is a great protection against market crashes. Every serious market correction, gold has been a great safe haven. So why not protect yourself? And there's great benefit to it. You can own gold inside your IRA. It's a tax-free, penalty-free move. You lose no value. You're just moving from paper to physical assets. It takes 10 minutes to open up your IRA. Okay, I show you how to do that. It does take about a week to 10 days to move your money, but it moves in kind. You don't lose any value. If you're moving 100 grand from your traditional account to your gold account, it moves 100 grand into your gold account. You lose no value. And again, why might you want to do this? We're nearing that $40 trillion in debt. We're at absolute bubble levels in the stock market with this AI trade. These corporations aren't going to be able to buy their way out of it at this rate. And it's already showing cracks, right? With these things that I just went over. And also gold in your retirement account, not taxed the same, not taxed the same as stocks, bonds, mutual funds, CDs, annuities, or even cryptocurrency. And I'm sure in retirement, you'd probably rather spend less in taxes than more in taxes. Am I right? You can also buy gold direct. No company. I've been doing this since 2010 myself personally. I've been helping thousands of people protect their retirement accounts since 2016. I've worked for 2 of the top 3 gold dealers in America before starting my own company. I do not know of any other company that delivers gold faster, safer, more effectively than us. Gold in your hands, silver in your hands in 1 to 2 days, fully insured. I hear every week almost someone saying it took them 4 to 8 weeks to get their precious metals. 1 to 2 days in your hands, fully insured. We also, again, we're a full service dealer. So I know there might be people on this call. You want to cash out? I pay top market dollar, usually cashed out same day. If you've got a lot, some people have a lot of gold, a lot of silver. If you have a lot, I can fly out to you and cash you out in the comfort of your neighborhood. Okay. That being said, we're on our question and answer. I know our chat went crazy here, so I want to make sure I get your questions answered. We're also going to put our meeting in the chat where you can meet with me one-on-one. If you have any questions you want to talk about, again, no obligation whatsoever. Talk about your personal situation. I'll see if gold's right for you. I'll give you all the ins and outs of how it works and be a resource for you, whether you work with me or not. I have I don't push, I don't have an agenda. My informing you is really what I get excitement about because I'm passionate about this. I do see these warning signs and I've seen them in the past, and look how gold's done since I've been in gold, right? And I am a gold owner, so I know all the ins and outs personally. And it's in your
Thanks,
chat.
Drew. Yeah, I just dropped the booking link in there. Drew, I think the thing that essentially, and I don't know how else to say it, maybe you have a better way of saying it, but we've talked about these individual indicators before. I know we did a great one, which I got to tell you, still it amazes me, the price of postage stamps as an indicator. And you talk about all these indicators, and I think what's scary right now is how many indicators are going long gold. And I think it's not just one or two, it's this stacking of indicators. And I think that's where, coming from a trading background, to me, that's going, guys, this is a no-brain move, right? That to me is a mindset of like, hey, if it's one or two indicators, okay, there's some issues there, but there's some potential issues. But when you have every indicator that you're taught to read all pointing in the same direction, that there has to be some type of confirmation there. So I think that's really when I listen to you right now, that's what I'm hearing. That's the message I'm hearing. Is that an accurate statement?
Yeah, so gold is a great protection, a hedge against inflation has been, because that's such a kind of well-known thing for people that, look at gold or know about gold. It's these little things that I don't think people know about gold. That's why I want to focus on it, right? Most people don't know that short-term trade on oil and short-term interest rates is kind of exhausted, and it's proven because, like I said, we just had one bad jobs report with all those bad revisions, and gold shot up 2% within hours. Within hours, right? So it's kind of showing the signs of, hey, dollar's not as healthy as we thought, right? And at the same time, this AI trade is already petering out. It's already showing signs. If we're doing 40% of our GDP growth for 2 years now has been all AI spending, and there's already companies saying we have too much. Meta, I've got too much. I'm going to be able to sell it myself. And again, Meta can squash all these companies offering AI solutions, right? Immediately, NASDAQ just knife drops, right? So we already see that the build out has reached its capacity. And then last but not least, if you want to know why we haven't had a crash, it's because we've been buying back our stocks. Corporations have been allowed to buy back so much stock that if you took it away, besides the top companies, a handful, like 6 top companies out there, if you took away all the stock buybacks, we'd have almost have no growth. And in some cases, some analysts are saying we'd actually be negative since the 2020 pandemic crash, right? So these are, and it's exhausted. These companies don't have any money to buy back their stocks anymore because they spent all their money on AI. And again, Sam Altman this week, that's really weird. Why would he call the number one? OpenAI is the number one, right? They're the ones that created, AI, if you will, right? They're the first ones to market. Why is he calling the government to say, hey, do you want some of my stock? That to me is probably the scariest thing. So protect yourself. I'm not saying that, the worst case scenario may not happen, right? But if you're not protected against it, what's the old saying of Murphy's Law, right? That which can happen, right, will happen. So take care. Again, protect yourself. You can get on my calendar by going to the link. Hold on, but dollar index is greater than 100. You're right. You're right. The short-term interest rate has played out. But if you just look at that one news bite on the second, look what happened to the dollar. Dropped drastically. It recovered, but that just news is showing how sensitive the dollar is to problems, right? And gold shot up 2%, right? So dollar came down drastically right away. Gold went up. So it's these pivot points you got to look at, is my point.
And Laurel, it's interesting that you point out that book, The Great Taking. I hadn't read it for a while, and I just recently had picked it back up and reread it. And for those of you that haven't read it, it's a theoretical book. It's extremely controversial. It talks about basically a large scale economic collapse, I guess is probably the best way to describe it, that happens with a global debt accumulation. And the irony with the book is we're living it right now. And it's interesting as you read it because it talks about certain factors that are happening, and as you hold it almost essentially like side by side with the current economy, it seems to be following like almost like a script with it. And one of the big factors with it is when that happens, there's no pullback. So that's or no return. There's no return. One of the other things, Drew, that you've pointed out is and I'm sorry, my brain is slipping on the term for uh uh dollar, yen, how many collapse
Fiat currencies.
fiat
Yeah.
currencies. That's the word I
Yeah,
was looking for.
100%, 100% of fiat currencies, guys, fails. There's a 100% failure rate on fiat currencies. Gold's been around for over 5,000 years and has survived every fiat currency collapse. Oh, here's the crazy one, Michael. Guess how long? I think you might know this. Guess how long the average fiat currency lasts before it collapses?
Huh, that's a great question. I have no idea.
50 to 75 years.
And we're 50 to 75 years off
Guess
of
how
gold
old the
standard.
US dollar is. And I get people say this wrong all the time. Well, it's 250 years old, right? We just celebrated 250 years. No, we came off the gold standard in 1971.
Yeah, yeah.
We
We're
decoupled,
50 to 75 years
completely
off the gold standard.
decoupled in 1971. So our currency is only about 55 years old.
That's incredible.
Guess how long currencies last? 50 to 75
Yeah.
years. So, and then there's another, by the way, Laurel, there's a couple great books out there that go over the exact thing that happens during collapse. There's investors, the big money always goes and buys up two things: all the gold, all the real estate. And last year, central banks bought more gold than they have in their entire 55 plus year history. And you know Vanguard, everyone know Vanguard, everyone know BlackRock. They control 66% of all the investable money in the world. They're buying so much real estate. Congress right now, on Trump's desk to sign, by the way, because it's past Congress, right? The House and Senate. They want to stop corporations from being able to buy residential real estate because they're buying so much real estate. Very interesting.
Well, and and a lot of it's residential, which is really interesting. A lot of it is straight residential property, which means that you're going to have controls over rent, which is a massive aspect of our economy. So
Well,
yeah, yeah,
they want residential because basically every time you get, and especially in some communities, right, the individual houses gives you that individual voting right to change rules, right? So that's why they're in some cases, depending on the city, that's why they're doing it on a tract by tract basis, house by house basis, right? All right, well, that's all we have for tonight. I do, yeah, yes, Laurel. If you do want to meet with me, my link is in the bio or in the chat. So go ahead and schedule some time with me. My calendar's up to date. We can have a casual conversation. But again, I think 4,000. If you're looking at gold and you want to protect yourself against these hazards and just be better prepared for more scenarios than the average person, $4,000 gold, in my opinion, is the right time.
guys. One
And
thing,
silver's a great
yeah,
price
and
too,
so
Mark. I know I always say gold, but we are a full service investment grade precious metals dealer, and silver is the 1-2 punch between gold and silver. So definitely silver, Mark. You can put on my calendar. We can talk silver if you want.
one thing with Drew, guys, I'd like to end with this if you don't mind, Drew, is there's not a lot of quote gurus that you get the opportunity to speak to one on one. And like Drew said, this is not a sales pitch when you get on with him. He literally likes to get on. He likes to talk to you about what you're going through, what's going on, what you're looking to accomplish. He will have those conversations with you. One of the biggest things that Drew does, and this is something that I've known Drew for some time now. And one of the things that impresses me the most with Drew is it's not a sales pitch. And the reason why it's not is because he knows when it comes time to buy or sell, you'll come back to him as long as he's good to you the whole process. And that's what he's going to do with you. So I can tell you right now, take advantage of the fact that you get on with the guru, have the conversations about where you are and what you're trying to accomplish. Get that, we call it a personalized strategy plan, but get that plan with Drew. There's no obligations with it. Take advantage of it while you can, because I can tell you right now, he books up quickly. His time will not always be there. Take advantage of it while you can. That's the best I can say. All right.
And Mark, I apologize. I'll make sure I talk to our web guys to make sure silver is prominently posted. I will tell you that a lot of our ads have silver on there, so I'll make sure the website more prominently posts. We do all. So the by the way, the 4 precious metals, investment grade precious metals are gold, silver, platinum, palladium. We do them all. We do them all.
Amazing. Well, thank you all very much for joining us tonight. Drew, as always, thank you. You do just an amazing job. I really appreciate you being here.
All right, guys. Have a great night. Have a great weekend. Hope to talk to you soon.